One of the businesses that we own is an insurance agency. And that was the first business that I started once I left law enforcement and kind of ventured off on my own and paid a lot of our initial monthly expenses with. So the insurance industry has really helped from a real estate investing perspective. It sustained my family while we were building our rental portfolio. And it has also given me a wealth of information about real estate investing because I specifically designed the agency to provide insurance for real estate investors. So, pretty thankful for that. It's also allowed me to add some value and network with other real estate investors. So, I've had a lot of fantastic relationships built around insurance and real estate investing. And in that, I see a lot of newer real estate investors struggling with some of the same difficulties regarding the insurance policies that you're supposed to get. So here are just a few rental property insurance tips for newer investors. I think one of the most important things is to know that the insurance companies view vacancy as the last time it was occupied. Now, most insurance policies, you start losing coverage after the property has been vacant for 30 days. However, if you really read the fine print, it doesn't start from your day of purchase. So the last time the property was occupied is going to be the date that you want to know. And that's going to help you determine whether or not you need to buy a vacant policy, or you can go ahead and buy like a normal dwelling fire policy is what's called, or a landlord policy, one that is considering and assuming the occupancy status as being occupied. If a property is vacant for longer than 30 days in like your normal turn period, then you're going to want to write a vacant policy and cancel your dwelling fire policy. So to do this very well is going to be time consuming. To make sure that you are always covered is tricky. There are insurance companies out there that will give you a longer grace period. However, these are not the large kind of box store companies that you're probably familiar with. These are going to be local companies specifically to your area. So one of the ways that my insurance agency has catered to real estate investors is by partnering with insurance companies that are a little bit more lenient on the occupancy status and the leeways, especially as it relates to a turn. Because in theory, what you're supposed to do is, let's say you buy a property that's occupied. Well, a normal dwelling fire policy is the best fit for that. You wouldn't need to buy a vacant policy. However, if that resident were to move out and your turn is a little bit more in depth than you expected, and if that turn is going to take longer than 30 days from the day they move out until you place the next occupant, in theory, what you're supposed to do is cancel that dwelling fire policy, write a vacant policy, and then once the property is occupied again, then you can go back to a dwelling fire policy. However, almost all of the real estate investors that I know kind of cross their fingers and hope for the best during that period, knowing if it exceeds 30 days, then there's a chance that there isn't any underlying coverage. So definitely make sure that you have a firm understanding and talk to your, preferably your local independent insurance agent, and make sure that the particular insurance company that you are writing your dwelling and fire with get crystal clear on what they want you to do from an occupancy standpoint. Because the last thing you want is to have a turn that lasts 45 days and something occur, and then that claim get denied because the property was in fact vacant. Now, also, just a fair warning is vacant policies are significantly more expensive than your normal dwelling fire, which makes this entire thing that I've expressed just now even more frustrating. The second thing that I would say, you're also going to want to be very clear about the pets. Each insurance company, and here in Ohio, they've gotten more strict on it, is what type of breeds are permissible and are not permissible for their insurance or underwriting guidelines. Now, while some people accept pets and don't necessarily see the harm in any breed, insurance companies definitely rate and exclude particular breeds of pets. So you're going to want to be clear on that. And in the event that you have a particularly harmful or historically aggressive breed living at your property, you're going to want to make sure that the insurance company is aware of that and make sure that you are very clear on the fine print of that policy. So, as if someone is bitten, then you'll know whether you do or do not have coverage. We have had insurance companies start canceling the coverages and the policies for people if they do an inspection of the property and see a dog of a particular breed on that property. And insurance companies are very forthright with this. They'll give you a list of all the breeds that they accept and definitely the ones that they do not accept. So keep that in mind.
Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.